Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is April 5th, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis in your decision-making process. But I am not a financial advisor, so please do your own research and make your own decisions. So this is a little bit disappointing. I'm going to tell you guys. Tesla down $54.19, 4.73%. Come on. Closed at 1091.26. Post-market, we are down by $1.56. So we pretty much erased all the gains that we had yesterday. So yesterday we had those gains, most likely because Tesla announced their delivery numbers, which were just a little bit higher than the delivery numbers of Q4 2021. And then the stock took off. It took off really nicely. The volume was not super high, but it took off really nicely. And today we basically are coming back to square one. That's a little bit disappointing. Is it understandable? Yes, we can understand it a little bit. After the fact, we can understand everything. Before the fact, then that's a different story. We had this purple resistance line. This is the resistance of the second channel. And we were very close to it. And it seems like we are caving down to it. So it seems like we are really caving down to it, even though we are not super close to it. You know, we could have been a little bit closer. And thank you for one of you who mentioned that I should be drawing this resistance line from the top of the November 4th, 2021, and down to this one too, January 4th, because this line is especially interesting because this is pretty much where we are at. It's right smack on the purple resistance line. And also, another member mentioned to me with a great deal of patience, because it took me a while to understand what you were saying. I had drawn this gray support line in the middle of the second channel because we had significant touches there. And also here, also right here, December 6th. So I just elongated it. And right now, I am not too sure I want to keep it now because it does not seem to make too much sense. But since it's a grayed out, it doesn't cost much to have it there. This is a disappointing day today. One of the reasons might be that the Federal Open Market Committee meeting might increase the interest rates by 50 basis points in May. So this put a little bit of fear in the market. Let's go see the 1-hour chart for now, though. So on the 1-hour chart, let's look at how this played out today. Okay, this is the first candle of the day. So we opened right here, went up to this resistance here, came back down, then had 3 full hours of the stock going down, and we touched this support. Second hour also respected the support. There was still some hope that we would be able to recover and do something like this. So there was hope at that point. Still at 130, there was hope. But then that support was broken, and now we are following this downward resistance. And because stochastic is below 60, the pattern should be that the stock should be going down a little bit further. How much further? Nobody knows. You know, it could stop at 1080, it could stop at 1072, or it could stop at any point right here. There is a major resistance right here, and there is a gap for people that love gaps. Here, there is a gap on the 1-hour chart, so we could be going down to 1025. We could be going down to 1025. All bets are on to guess where it will stop, but the pattern is that there is a support that has been broken, and stochastic is below 60. So now the stock is in a technical fall. Let's see where it ends up. If we go back to the daily chart, the stochastic is still at 84. MACD is still super great. RSI came down of the overbought zone, and DMI is still super great. So from an investment perspective, there's nothing to be afraid of. It's just from a trading perspective, there's a little play that I just showed you on the 1 hour chart that can be interesting, much like the play that we had several days ago, which was a pretty similar setup. So let's see what happens there. Let's look briefly at the VIX. VIX increased a little bit today. Volatility in the stock market has been increasing. This is just an indication of that. And we saw an indication of that with Tesla. But in terms of the stochastic on that VIX, the stochastic is still very low. We don't see a real big change in pattern yet. And we don't even have MACD crossed over bullish. So far, we are still okay in terms of the VIX. The pattern change has not yet occurred. If we look at Dow Jones, yes, a little bit of fall for Dow Jones also. SPX caving in a little bit. Nasdaq Composite is making an interesting symmetrical triangle right here. Interesting symmetrical triangle. And now we broke outside of it. Nasdaq is weaker than S&P 500, and because Tesla is part of Nasdaq, it can get influenced a little bit more. In terms of Nasdaq 100, the picture is a little bit different because we seem to be a little bit more in a congestion zone. And that congestion zone is not as clear here on the Nasdaq Composite. So basically, this was an off day for the stock market. Depending on what happens today, of course, it's going to have an impact. But how big of an impact, then nobody knows what is going to happen. So let's just look at our lines. Let's just look at our patterns. And if we see a break in one of the patterns, then we react. We cannot predict the stock market. Nobody can predict the stock market. We can just look at the patterns that the stock market is making. And if there's a change in pattern, a significant change in pattern, we react accordingly. That's it. That's all. So there's no need to get emotional and everything. We just do. We just play our hand, and we just play our hand and hope for the best. Thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. You can click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.